Welcome to the Ecomminsiders podcast. My name is Debbie, and this is being sponsored by SPCTEK. Today's topic is the 4 steps to building a real, profitable, and sustainable e-commerce business, starting with private label on Amazon FBA. And my guest is Neil Twa. He is the CEO and co-founder of Voltage Holdings. Today, we're just thrilled to welcome him because of his 17 years of experience in building and scaling business. Neil is actually a true expert in ecom and Amazon FBA. He's helped generate tens of millions in revenue through his proven strategies, and he's guided over 1,000 entrepreneurs in launching profitable Amazon brands. He's also the author of The Almost Automated Income with FBA, where he shares his insights on building lifestyle driven, sustainable Amazon businesses that can thrive without requiring years of experience. Neil, welcome to the show.
Hi, Debbie. Thanks for having me on.
Yeah, we're excited to really get some good information from you because people just need so much help if they're doing Amazon.
Yeah, we all do. Yeah.
Yeah.
Well, Amazon included, I suppose. Yeah.
Yeah, a little bit. So let me ask you this.
Sure.
You didn't have any formal training, business training, or anything like that. How'd you make a successful online business without it?
Great question. I did get a little formal training, which helped me figure out that I didn't want to continue through that anymore. It wasn't moving quick enough. It wasn't agile enough. It was too structured. Having a background in music since I was in the 4th grade and playing music and creativity and loving jazz, and loving the field of creativity with music, business in the way that it was being taught to me when I went to college was just too structured, too formal, too much like here's the line and you can't step out of it. So I always kind of not like say buck authority, but I would always buck that as like, why, why not? Why can't we do it a different way? Why can't we go this way? It always was being met with resistance. And so I couldn't stay in that place of resistance constantly when I wanted to try new things and do new things. And so I think there's just an undercurrent in my person of tenacity and perseverance. I don't take the answer no. It's a KNOW. I don't know. You don't know. Let's figure that out until it's a hell no. And then it's like, well, why is it that too? So I've just kind of got to the place where I, wanted to figure out how to do it and wanted to go where it was being done. And since I was new to the, internet, and the internet was just coming online extremely fast during that period of time where I was trying to reconcile those answers to the questions, I went to the corporate world for a while because that's where the money was being spent. Yeah. And in that, I got some formal training through corporate world. Things were moving and changing because I was always asking questions and pushing the pace. I got asked to do things that were more challenging. And one of those was to, lead teams when I was very young and to push projects and tasks and see what was possible. And that really helped me, accelerate pretty fast for my corporate career, even though I didn't have an undergraduate. And by the time I made it to IBM and got successful with IBM and had a good time and a fun time with that, I kind of reached that pinnacle around 2006, 2007 and said, okay, now what? I don't want to continue to elevate to this point. I've always wanted to do my own thing. And it just so happened that at the point where I was completely done with it, IBM was done with me. They called my number. They said, your badge number's up and either you can go retire or go to Argentina. And I said, well, I'm retiring. So burned the boats in 2007, not the bridges, very important, but burned the boats.
Yes.
Ever again, not going back. It's time to do my own thing.
Yeah.
And just failed up. Is the simplest answer. I didn't have a super plan. I didn't sit down and write a business plan. I wasn't terribly funded well. I didn't really have a focus other than I just didn't want to do that anymore.
Our stories are probably pretty similar. I did go back and get my degree years after I'd been in the business world, but I did get to a point in the business world where I was just like, this is not, I can't do it.
I don't want to do what's required to get to the next level. And I saw that, and I had some mentors in that and who were partners, and like the next step is to push for partnership and inside of IBM. And when I realized what I had to do that, I simply didn't want to do it. I didn't want the lifestyle that came with it. Right.
For me, it was VP. I always said, oh, I'll be a VP by the time I'm 50, and the closer I started getting, the more I started thinking, I can't be that dysfunctional.
That's not for me.
Not able. Yeah, I'm a pretty direct and blunt person. And when you get to some of those higher levels in some of the corporations, that's not looked upon very nicely.
No.
When you just say, hey, you know what? You shouldn't be doing that.
The more people told me no, the more I got frustrated with it, and the more I was like, well, I'm going to do it anyways. Like, you can't keep telling me no. And because they were afraid of what I was saying, they were afraid of what was happening. It didn't end badly. It just didn't end right for
Yeah.
some of the folks who were in there because they just felt like I was dumping on them. And it was fine. They wanted to go that way. And I don't think that entrepreneurialism is for everybody,
So
but
how
it was
did you
certainly
get
for me.
into Amazon? I mean,
Well,
what led you
Amazon
to
came a little
Amazon?
bit later. It was part of that fail up process.
Okay.
It was part of the process of recognizing as I developed my own business, as I developed my own, at this point, management consulting firm, and as I hired people into that firm and became sort of a high level management staffing company, okay, that was doing projects and sending people into the field instead of me doing it. I was into the online marketing space. I'd always kind of been in the online world to some capacity. I just hadn't really done the marketing side of it. So I started into that. And through that process, I got really good at lead generation and paid traffic. So I was
Mm,
buying media and sending it to offers. At that point, I was just testing things called affiliate offers and mobile installation, predominantly on mobile traffic because I came through the mobile industry. I grew up inside of Sprint when it was the first mobile PCS division. I saw them
oh,
go to 80,000 employees as we watched that ride up for 5 years. And I was doing mobile and customer support, knowledge management, and things around the mobile industry when I was at IBM. So it made sense to me to do marketing and online things with mobile phones. This was before they were really, as simple and easy as they are now,
yeah.
and as
Yeah.
prolific as they are now. So I just got into the marketing world, got really good at the lead generation traffic stuff, so good that I was actually making more money than the management consulting firm. So like, I really don't need your staffing and issues and any of that crap anymore. So I shut most of that down and just got involved in the online space, which was predominantly buying media traffic and arbitraging it for profit. And that led to the realization that when certain offers were doing great, I couldn't control the end result because I didn't control the offer, right? I
Uh,
didn't control what was happening at the end. And I said, I need to control the offer. And in the process of going through the diligence of what I would create digitally or even physical product wise, looking at the e-commerce world, I ran into a friend who's like, hey, I'm selling on Amazon. You should check it out. And I said, I don't know what that looks like. He's like, let me show you what I'm doing. It's called Fulfilled by Amazon. And it's this company that Amazon bought, which is a logistics and freight company. And they're delivering the products to the customers. And I was like, well, they're delivering books. And he said, yeah, but they're now starting to sell all kinds of other products. And I'm like, oh, really? So I took a look at it. And what I realized was it's a traffic source. It's what I was doing to get people interested in the product and get them to click over. But it was also a way for me to understand that I could build the product itself, but I didn't have to deliver it because I didn't know about the warehousing, the people,
yeah.
logistics, the freight, all the other stuff that occurs, which can be terribly complex and then very costly. And I'm like, oh, well, Amazon can do that for me. They have the
Hmm.
Fulfilled by Amazon. They deliver the product, they handle the customer support, they take the returns back, they deal with the product, and I can ship it to them and they'll store it and ship it to the customer. Okay, that's pretty cool. I get that concept. So I focused on the marketing side of it. And that's kind of what led
So
me into Amazon.
in the very early days when you got in, can
Yeah,
you share with us kind of a memorable moment of a challenge or something that you faced at that time? I
sure.
mean, nowadays there's so many challenges, but it was such a different place back then.
It
I mean,
is, and it's gotten more complicated, of course,
mm,
as time. We could flip products better because Amazon was okay with you doing more product arbitrage,
yeah,
whereas now they're shutting almost all that down, right?
yes.
Before it was easier to grab products and make profit, send them from Amazon and have them delivered, and Amazon was, it's kind of Wild West, basically. And so we were making stupid mistakes. We were making opportunities. We were arbitraging products to start off with. We'd find a product that we think we could sell 100 units of, and we'd buy it and we'd ship it to Amazon, and then we'd make a few $100 or a few thousand in profit. And we're like, hey, we could see this working. And by that point, we weren't building brands yet. We were just flipping products for profit,
Yeah,
which, by the
yeah,
way, anybody can do for 5, 10, 20, $100,000. Flipping products isn't terribly complicated anymore. It was harder back then. It's a lot easier now, but we
yeah.
weren't building brand. So what was happening was we were caught in this job cycle of finding a product, selling a product, finding a product, selling a product. And then when it would sell really well, you couldn't get more of another one. I remember this one particular time my partner found this deal on a website, and we discovered that the product was on Amazon and it was selling pretty well. And we bought like 100 units of their product and we sold it in like 24 hours, right? And we made a few grand. We're
Oh,
like, wow, let's go back and buy this. And he's like, oh, we found a coupon. So we ordered like 600 units from their site with like a 40% coupon he found. I'm not sure how he did that. And so we got that order, and immediately within the next 2 days, we get a call from the VP of sales from that company. And it's like, why are you ordering 600 units of this product? It's not meant to be consumed at that amount. And I'm like, so we're on Amazon, we're selling the product. We were clear, and she was
right.
mad at us. She's like, you're taking our sales off Amazon. I'm like, oh, okay. Can you give us a wholesale deal? Will you come with an agreement? Can we, become a reseller of the product? No, we don't want you to do that. So that pissed me off. And with
Yeah.
that, I said, okay, we could go brand these products. Like we could make
Mm.
our own. Like what they're doing is a lost opportunity. They told me no, and now I want to figure out. And so we started to look at the branding side of it, how we get products and pull, the opportunity we knew how to do with the systems and the marketing and Amazon itself. But we were running out of product. And the way to solve that was to have product manufactured at our own to an unlimited state.
Yeah.
And so as
Well,
we
I guess
developed those,
that
we
kind of
started building
leads
brands.
us into the question, what exactly is voltage and what benefits now do you have for Amazon sellers?
Well, that particular product has led us into what we call our 5x5 product launch playbook, which is part of the Voltage system of doing business on Amazon and multi-channel. So we'll now go beyond, of course, to TikTok shops and Shopify and in paid media and traffic. We create a holistic marketing e-commerce engine. We just start incubating products on Amazon because our process was to determine if we could sell it on Amazon, we could sell it to
Mm.
everybody, right? Because it has mass marketing appeal, and that's only gained more
Yeah.
traction since 2012 when we started doing this. It's gained huge momentum, right?
Oh, yeah.
So it's a huge adoption channel for products, and everybody sort of trusts it now. You probably buy from it. A lot of people who are listening to this do. You trust the ability of the product to get you, and if you don't like it or have trouble with it, you know how to deal with it. You can return it. You can
Yeah.
leave reviews. Everyone understands the system. It's very intrinsically understood now. It wasn't back then. It was still, again, Wild West. But we had learned the process of taking those products and flipping them. So we just started branding the products and then having them manufactured for us in our own brands with our own intellectual property, as opposed to flipping products like I was doing with that one company. And with that, we could have the upside potential of the longevity of the business and brand building. And as we continued that process and got very good at it, by about 2013, 14, we had our first 7-figure brand online.
Mm.
And from that point, we were hooked, right? It was kind of like
Yeah.
a dime bag of opportunity in the e-commerce world. We were
Yeah.
hooked. We were addicted. We wanted more, right? And so we kept this process going and we systematized it. My partner that I met, Reed Larson, who's the co-founder with me and also on the book, developed the processes and systems by which operations occur. I'm on the marketing, CEO, vision, helping pave the way for everybody who gets what they need and does what they need. And he's at the operation, tactical, finance, COO level. So he's about systems and operations and control mechanisms, and I'm about business and building and jumping off a cliff, right? And so we combined those two brains into one and built up the systems and processes by which we were able to repeat that. And then we were doing it well enough that some friends and families and others in some groups we were talking to were like, hey, show us how to do it. And we're like, okay, here's how we're doing it. And it got to be, time consuming, right? Because we were
Yeah.
showing so many people what to do with their businesses. We weren't doing it all ourselves. And since we were practitioners first and operators first, and then teaching people second, we had to kind of invert that relationship. And in the process of doing that, we've taught, quite a lot of people at a very high level to do that. We kept it small. We don't do courses and programs. We do mentoring and coaching and one-on-one. And we do it with very small and strategic purpose because I don't have warehouses and I don't have employees. I actually have operators, and operators are people that I have trained to become successful. Someone who's an aspiring entrepreneur or somebody who's in the entrepreneurial space and wants to go faster and bigger. We train them on the processes and methodologies that were developed in our company that we've branded
So
into Voltage.
that brings me to what would be the steps
Mm-hmm.
if somebody, an entrepreneur, found themselves in that place, they're like, I can't do the corporate world either. I would
Right.
like to do my own
I
thing.
went out.
And they want to start out with an e-com
Yeah.
business. So what are the steps that an entrepreneur would take to do that?
Well, step one, you may have heard me say indirectly, but directly, it is what the heck do I sell? The first question that came out of one of my first consultations with somebody a long time ago, we went through this whole process of doing this conversation. And at the end of it, he just looks at me and he says, yeah, but Neil, what the hell do I sell? And so we're like, okay, we need to go into the numbers and show you why you sell these products by the numbers, not by emotions or gut feel. You can't run a business
Yeah.
by emotions and gut feel. Here are the numbers by which we define product, market share, opportunity, upside potential, and profitability predominantly. Okay. With profitability as a focus, we make sure that you don't run the business by gut feel. You actually can pay yourself, pay employees, pay contractors,
Mhm.
pay the inventory costs, pay for the marketing and logistics, and make sure you have a profitable business. So with that, it became, conditional learning as we had gone through all those product resource launches and the testing of products in our own brands, and then teaching quite a lot of other people. We got to see a lot of different products go to market. And in there, we saw a lot of patterns in the data. As we went
Yeah.
by the numbers, we would determine that certain products had to meet profitability requirements in order to really see the upside potential. Okay. So we set a conditional statement that no product could be sold with less than $12 in profit in it, net profit per unit. Okay. So with that, it eliminated a whole group of products. And from
Yeah.
there, then we started to determine, what's the upside of that market? Does it have more than 10 to 20 million in searches every year? And if the answer is yes, we put that criteria in place. Then we put a criteria in place of this conditional learning of what the heck do I sell? Is it $50 to $500 in retail price point? And the answer is yes, it goes on a list. Okay. So we're kind of eliminating by data points and experience these products to answer the question, what the heck do I sell? And to make sure that it's profitable, then we do it. As we go through that first step, the second step of by the numbers just determines that without emotions, do all of the data points required to sell this product add up to profit? And if it doesn't, you move to the next one because it either looks good or it looks worse, but you can't spend a whole lot of time lamenting over whether or not it doesn't look better. You can't make the numbers look better. You simply move to the next product. We call that
Yeah.
don't marry your product, steal someone else's girlfriend instead. There are plenty of girlfriends in the market, millions of girlfriend opportunities to not get involved. And so as we test these products in the market to learn and answer which ones will sell, we're actually not smart enough to tell the market what it wants. That's like the 1 of
Mm.
1%. That's the Shark Tank thing. That's what everybody hopes and thinks you have to do. What we
Yeah.
realized was it's innovation is the opportunity, not invention. Okay. There are plenty of product
Yeah.
opportunities to innovate, like millions of them. Okay. And the process of
So it
elimination of that
was
basically determined where those products live and which ones we should actually market to.
when it was arbitrage, it was easier for people to get into Amazon
Correct. Because
because
you're
of the
leveraging someone
fact
else's
that,
brand.
well, yeah, and you didn't have a huge outlay. Like you said, you could
Correct.
start with 100 products, right?
You
And
can.
nowadays, if you're creating a white label, you've probably got some kind of a minimum order that the manufacturer is requiring and stuff like
Correct.
that. So do you think one of the biggest challenges today is that people may not understand how much it takes to really get started with private label and Amazon FBA?
Yeah, one of those things is that we do test or do it's called a market test of 100 units on the private label side. Okay. And the difference between white label and private label, just to clarify in people's minds, is customization. Okay.
Mm.
So private label is a customized product by which I can actually maybe make a trademark of that brand. I could put intellectual property on the product itself and it's differentiated in the market. Thus, I'm not near patents or other things that I'm infringing on. I have a unique product that has been innovated in the market and customized to my needs and then therefore different than the market. So I can sell it as a private label product. Okay.
Yeah.
With that, it's my brand, my private. Now I can do that under a test marketing scenario with only 100 units. So we test the market for 100 units to validate, am I in the market? Did I get my listing copy images correctly? Did I speak to the market correctly? And can I sell my 100 units in my account in the market and someone wants to buy it? Okay. And in our 5x5, the goal there is to put 5 of those test market products out there. Okay. Again, not smart enough to tell the market what it wants, but smart enough to see up to 80% of the data that we know is profitable, has upside potential, people want it, it's in demand, and we can sell 100 units of it. The 20% gap is when we actually start selling it in the market, and the market tells us, how close are you? How close
Yeah.
are you? And as the law of
So I'm
averages goes,
curious, when
yep,
you pick 5 products, do you pick products that are closely related, or do
yes.
you just okay, all right.
Same brand, same intent, same avatar, 5 different products within that narrative. So I would offer you, because say you're a lady who likes kitchen cooking and maybe has grandchildren or whatever and wants to, has kids and is doing a specific activity, you are an avatar or a profile. I'm going to offer you 5 different similar products and you tell me which variation, size, color, shape, or product type you like. Okay. And what is going to happen is by the law of averages of that 5, I'm going to find 1 or 2 of them that becomes a hero product. Now, here's
Okay.
the thing in statistical relevance, it is very impossible, very, very difficult. Okay. Say it's like, 100 feet from a dartboard with a blinding on, a blinder, excuse me, and you're throwing a dart trying to hit the middle of the dartboard. It's very statistically impossible. And that's what most people try to do or are sold to do
Yeah.
in the course guru hopium mindset world.
Yeah.
Order
Yeah.
5,000 units and blah, blah, blah. So you could start testing in a smaller way, but here is the point I think you were after, and this is the point of clarification for this kind of business model, is it is a capital intensive outlay for physical product inventory, right? So while you can flip products faster for arbitrage, getting to 0 to 100K in a business with product flipping arbitrage is not terribly difficult. But getting to a product based business that is a brand that goes into millions, okay,
Yeah.
takes a capital inventory outlay. So once a 100 unit test successfully launches and I see it goes to market, and these are the two I'm going to capitalize, I will put 1,000 units into each of those products and do a full market product launch. Okay. When that occurs, I know I'm putting good money and good time, good energy and attention into a product that has upside potential. It's proven it could sell. The question is, between more marketing and more inventory, how much can I sell and how fast can I turn that over in a 90-day period?
Yeah.
Okay.
So, Neil, I think you hit something really important. If there are people out there who are listening and they're, thinking, oh, I'm thinking I want to do Amazon. Everybody does Amazon. Every other commercial on social media is about how
All
you
over the
can
place.
find the 10,000 a day, 10,000 K a day product type thing,
Mm-hmm.
right?
Mm-hmm.
And for me, that's kind of irritating when you're in an agency and the people come to you and they want what they're seeing. And you and I both know that's not easy. It
Short-term games,
takes,
yeah, versus long-term games.
yeah, it takes some outlay of capital to get
Uh,
started, and it takes some experimentation. Like you said, we're going to try some products. We're going to make sure,
I'm going to
because
put good money, time, and attention into testing the product first, right? With no hopium, only data driven opportunity. And when the data proves where I should go, then I go. Because what you need to understand is I'm selling listings, images,
yeah,
copy, and graphic to an AI system. It is selling products and delivering it to the customer. That's how you need to think about it. So I'm thinking about the product second. I'm thinking about who is buying it first. And if I can sell that product to the customer, remember, sales fixes everything, then I
yes,
can
it does.
determine the product opportunity and upside potential. And then I know I will capitalize that win to whatever level it takes, which is specifically, I will tell people, do not start on a physical product based business without a minimum of $25,000 in capital to the business itself. Okay. When you're
Yeah,
working for a 3 to 5 year goal and you want to live like no one else can live in 3 to 5 years, you got to do what no one else is willing to do in the first 3 to 5 years. And that means
there you
time,
go.
attention, and energy and money have to be deployed correctly. We'll deploy $50,000 to $100,000 in a new brand in the first 12 months or less, depending upon how it speeds through the market, how it's adopted, and how fast it goes. My opportunity at that point is to capitalize what is working, and that is where the real Achilles heel. Okay, I hope
Hmm.
people will hear me when I say this. It is not the getting started part that is the problem. We saw that a long time ago. It is the growth capitalization
Yes.
of a physical product inventory business that causes people to slow the business down, throttle its ability to grow, and capitulate its ability to get to 7, 8, or 9 figures. My most successful
Right.
case studies, and the faster that they were able to deploy that capital, the faster the business was able to grow.
Mm.
Okay, that's the dirty secret of physical product businesses that all the hopium guru advertising people don't want to tell you about. When I want you
Yes.
to build a real business, I want it because I have a selfish, big, hairy, audacious goal in mind. You want to hear what it is?
Okay. What is it?
Okay, so I acquire companies, right?
Oh,
I
okay.
acquire profitable businesses through M&A. So when my clients come on board, I'm going to teach them how to grow it profitably, build it profitably, and then we have what's called a first right of refusal. It's a non-contractual agreement, but a verbal
Yeah.
agreement of first right of refusal to allow me to look at the company for purchase once it reaches past a certain buy box. Okay. When it hits the buy box within 3 5 years, I will look at purchasing that company away from them. So that I'm both the beginning and the end. So I have a very specific goal of each person who works with us on a
Yeah.
one-on-one going through 3 to 5 years to exit that specific brand, and I want to buy it. So that's my big
I
hairy
love
audacious
that.
goal.
Yeah, I love that. It's very different than probably what there are a lot of. Do you consider yourself an agency?
Not at all. I don't do any agency work. I do client-based work against those who want to become operators and CEOs of these companies and really turn it into a long-term opportunity for
Okay.
themselves. And that is not agency work, right? That is training, mentoring, and consulting. It's partnerships with my clients where we do profit splits on companies we will either help them build or acquire in that process where they can become operators and builders, or doing joint ventures and deals in which we acquire companies and they become operators in those companies.
Okay.
So I actually train
So
CEO operators.
if sellers are trying to identify, you've already said one thing that I think is very important when you're identifying product is
Hmm.
you have to take the emotion out of it.
You do
Okay.
100%.
I love to decorate, but I don't know that my taste in decorating will be what would sell on Amazon.
A mass market,
Okay.
sure, sure.
I like Southwestern. Southwestern might not be popular, So I'm curious. You mentioned some of the formulas that you've kind of come through. Do you think that having some of the apps and programs and stuff like that is actually helpful now in identifying some of the
No,
basic?
it's not. Let me
No?
tell you why. Because I don't
Okay.
have a program to sell you. I don't have a horse in that race. Okay. But I
Okay.
had a company I built called Ace Inspector once upon a time, which was a data driven Amazon aggregator tool. You may have heard of Jungle Scout and Helium 10 and these other
Yes.
companies. They all came after us. Okay. And in that growth process, what happened was the data it wasn't aggregated by data from Amazon enough that we had to
Mm,
use calculations and algorithms in our own accounts to determine and project forward what would be data that we could analyze, because Amazon keeps so much of that close to the chest, right?
yes.
So all
Yes.
of those tools are speculating based on their own algorithms. And what the frustration with that was is most people were falling into the same traps of selling the same products in the same places, and all the tools were sort of leading them to the same competition where they
Same.
were
Yep.
competing with each other over and over and over again. And that got to be extremely ridiculous. So I sold that company and got rid of all that, right? In my house, we built a tool set. We built an internal mechanism we use to launch our own products and brands with our own proprietary data. With Amazon's new product opportunity explorer data, we're able to pull that into our system, which gives us actual results from Amazon and combine
Yeah.
that with our 5x5 strategy. And we don't sell that publicly. So I don't have anything I do publicly other than talk to people and express what we're doing in the business world to see if it might be a fit for future, opportunities to join and do what we do. We are a by invitation only group. I don't take very many people. You have to come to me
Mhm.
and I have to validate whether or not I think you're a good fit, or I'll tell you no.
So
Um,
I'm telling you, Neil, you are speaking my language. Okay.
mhm.
Absolutely. Because what happens is, our agency does do product hunting for people,
Sure.
and we get people who will come to us with a helium 10 list.
Mhm.
Here are the things that we want to look at.
And
All
15 of
right.
them are kitchen spatulas.
Yeah. And you're like, if helium 10 found this for you, how many people do you think helium 10 found this for?
So we aggregate a data set very different, and the data is everything we do for the business choices, the money, the financing, the profitability of the product, the upside potential of the product. It is all data driven. Our green light process, or we call GLS plus process, our systems, our tools and software are all built to find the product opportunities that are
Mm,
setting in places where the masses don't go. So we don't sell in categories and departments. We sell in nodes and sub nodes. Okay.
I
Or
love
are called
that.
leaf nodes. And in those areas, we're in brand to brand competition. So there are usually only 5 to 7 competitors in the entire market that we're going after. They make up 80% of a particular node of market share for a specific product, let's say a nugget ice maker, in which there are 37 million searches a year on Amazon, and that is going to 8 primary brands inside of Amazon, and we want to become the ninth. Okay. And we want to slingshot our way in there. So we go and we attack those 8 specific competitors for that majority, and we're shooting for 1% market share in the first 24 months. Okay.
And
So with
let me
that, I
ask
know
you
exactly who
about
I'm attacking and how much profitability, upside, and goal potential, and exactly who I'm going after in that market share.
so that you're going to go private label instead of white label. Do you ever
Private.
start white label?
No, well, yes, in sort of our market test with 100 units, it's
Okay.
sort of white label, but we still change the packaging to make it
Okay.
unique. But the product itself, the first 100 units, could be considered a white label product because we'll pull what they have off the shelf that's very similar to one that's already in the market. And all we're doing at that point is trying to prove one particular thing. Can we sell the product? Can we sell it at our price point, at our profitability goals, and our future projections, and our 12-month run rate of projections?
Okay.
If we move it into customization, if we move 1,000 units to market, if we can move one container in 12 months of that product, will it be profitable? And if the answers to all of that equation in the market test and the launch are yes, I have a product that can last for years. So I'm willing to
Good,
do
good,
things in the
good.
first 3, 6, 9, 12 months. Others are not willing to do or are not patient to do. And I was not
Well,
patient once upon a time to do it either. So it really gets down to I'm building a real business that in 3 to 5 years has a saleable asset
mm,
component to it, because I'm building the saleable asset. I'm not building just sticks out of basic 2x4s that I can throw
yeah.
up and sell in a year if things go bad. I'm building a house that I know has a much higher
Mm,
saleable asset later on.
yeah. Yeah. And so, I mean, I really do like what I'm hearing in that we're not taking I don't want to call it generic because I mean, but it's
No, it's not a
pretty
me too
generic
generic
market
product. No,
research
no.
as far as helium 10 and some of those apps that
No.
are out there. Now, there are a lot of places that are creating new apps and stuff like that, but our market research is actually going to market.
Yeah. You actually go to market and find that last 20% that you could guess in a million times and be wrong 999,999 times. I think I got that right. And what you need to do, here's a good analogy. Have you ever gone to a farmer's market? Have you ever gone
Yes,
down to okay.
yes,
Do you ever see very many booths with one table and one product setting in the middle of it?
no,
No. Do you go to
no,
Walmart and see like one shelf of product in the middle of a 200,000 square foot building?
no.
So why would you think that if you're going to launch one product into a billion SKU marketplace that you're going to hit a laser focused seven-figure product the first time you do it,
Yeah.
right?
You
Yeah.
got a million competitors and a billion different products. I
You are
think you're
not
right
going
on.
to hit it. It is the hopium mindset guru buy my course nonsense that you're buying into. In actuality, the more data I test in the system, the sooner I will find the data that works in my account, in my brand, in my marketplace to approach that. And then I go out and put more of my wares on the table. So as I find one or two of those products in my 5 market test, I will know that I can go and make more of those products, more variations, more shapes, more sizes, put more of the same product in different packaging to expand that out until I have 10 or 20 SKUs selling in one seller account, one brand, 10 or 20 SKUs, hyper focused into one niche. Okay. That is one product focused and one avatar focused. And then you will watch 7 and 8 figure and 9 figure businesses explode. You go into a particular niche and own 1% of that. That's all you're doing. They say success is boring. And I've come to realize that success is boring because once you get into a product in a brand and it gets dialed in, that's all it's doing now with systems and
Yeah.
automations and operators. I don't even manage it anymore, right? So once we launch a product, launch a brand, it goes in front of an operator who's been trained and is running multiple other operations already. And they take the wheel on that and they continue to run it every day, week, and month. And I move on to the next brand,
Yeah.
right?
I think that it's really, if people are listening out there, I really want you to hear what Neil is saying, because what he's saying is that if you do want to go private label, great. But there are mistakes that can be made along the way to go private label
Very
if you
costly.
aren't actually, yes, that can be very costly. And one of that is your product research model,
Yep.
and really making sure not that a spreadsheet tells you that it will sell, but that you actually have customers who are telling you that it will sell.
I buy in the
Um,
product. Yeah.
Y Yeah, I love that.
Sales
Tell me a
fixes
little bit
everything.
about the role of product reviews in
Sure.
building these private label businesses.
First half of the product is sales. Remember, we're selling listings to an AI engine. Amazon and all these systems online are now AI data driven engines. And so it's only looking at my data determined by the market, the share, competition, and the customer to determine whether or not my product is better and should be shown to more people. And more people are going to want it. It's more in demand. It's more trending. It's more available. It's more. Okay.
Yeah,
Those are just AI systems. All right. So when people focus on the product too much, they're still caught up in that if you build it, they will come Iowa thing. They're still caught up in the right, the Kevin Costner movie. They're still caught up in the
yeah,
Shark Tank idea that I have to build something completely and holistically unique or no one's going to want it. When in actuality, people are buying the same product over and over again, 10, 20 million times a year. Okay. And they're buying it because they know it, they trust it, they understand what it is. So in the product research process, we have to understand that when we go buy those numbers and we go buy that profitability, we're looking for data that simply trends as evergreen blue sky data. And then we simply
yeah,
put a product data set in front of a customer who is buying on the hope, faith, belief, and solution oriented aspect of their purchase. In 2 days or less, they'll get the actual product. So when we build these things and go out to the market, we're first testing that we can sell the product to an AI engine who is then going to
mhm,
deliver it to the customer. Now, the full circle component in your review question is, of course, building a great product that will get positive reviews when it shows up, doesn't break in the first 5 minutes, it doesn't look like the average product, it doesn't feel like
right.
it, isn't packaged like it either. That builds your healthy review process. You can do a really great job selling the product and crash the whole thing on negative reviews. Okay. You can spend all your time doing product research for a product only okay, and have the most wonderful, amazing product that might even have a patent capability, and no one knows it exists because you've never sold it correctly or didn't even sell it because you spent 2 years trying to get it to the market. Okay.
Yeah, yeah,
So we need
yeah,
a balance of marketing, direct sales and response, and delivering a great product that provides great reviews.
yeah.
Okay. That is the whole ecosystem of a physical product. Don't do either one of these half booty. Like we have this country is saying in the country can't ride two horses with one ass, right? So at the end of the day, we want to ride one horse, one channel until seven figures. And it starts by understanding the data of the products, who's buying your product, and then of course creating intrinsically, we all know this. We want a great product. Okay.
Yes,
You know the
yes.
difference between a flip phone you pull off the Walmart shelf and you open the plastic and there's your little flip phone versus an iPhone where you open it up, it's weighted, it feels good. You open the package, you're getting an experience. You know the
Yes.
difference immediately between good
Yeah.
products and bad. We all know that. So don't sell a crappy product. Follow
So
me.
how do sellers manage to get their reviews effectively then?
You organically let the system do it. By no means do you manipulate the system, ask for reviews, play outside the terms of service at all. Okay. They've gotten so good with systems and AI with that.
Yes.
Let it organically grow. Okay.
Do
We have
you
a
recommend the Vine program?
only after, for those of you, this is a
Okay.
pro tip. Okay, you're getting detailed and tactical, which I appreciate it. We will not launch the Vine program until I have at least 5 to 10 organic reviews on the product that are distinguishing the product good for great, because the Vine influencers will look at that. And if you get negative reviews in the first 5 to 10, if
Yep.
they're real or not real, faked or manipulated or whatever, it will influence the Vine buyers. Okay.
Yeah.
We do not
Agreed.
do vine buyers on a brand new product out of the gate. We'll do it after we've had time to organically prove the product is good, meets the customer criteria, they are actually leaving positive, good reviews, and then we will implement the Vine program.
Perfect. Okay. So now we have gone through the product, market research and stuff like that. Let's talk a little bit about product launch. What
Yeah.
are some of the first steps that you're going to take now that we know, okay, here are the two or three items that we're going to go out there with our private label? What do we do? What are the first steps to take for the launch?
Yeah. So we want to make sure that our data, okay, that we're putting in the market for this AI engine to read from the start date that it goes live is the best data possible. Okay. On TikTok and now Shopify and originally on Amazon, there is something called a flat file. All right. It's not the
Mm,
regular customer interface. It's a spreadsheet, and it's a painful
yeah,
spreadsheet. Okay. In that, there's a bunch of data. There's even actual other data columns that Amazon doesn't tell you about, but over the years we've discovered there's about 5 other columns you can add that will be accepted by the system for triggers and switches and things you can actually control within Amazon's algorithm. Okay. When you put all that data in the system, it's reading that data and determining based on AI whether or not you are relevant, or what we call hyper relevancy, for your product brand, your images, your graphics, whether the AI can read the images and determine what kind of product you actually have, because it's doing that now, and whether or
yeah,
not it can determine the exact product and avatar based on the language and the copy, not keyword stuffing in your listing like some of those engines and systems and tools do out there, but
yeah,
natural language queries that talk to the product, the semantics, the latent semantics of the conversation, or different terminologies like pop, soda pop, these kinds of things, and get that language very hyper focused on one particular customer in that avatar and speak directly to that person, knowing there's millions of other people like that. We speak directly to it. Similar to the way you talk to an audience. When you're in
yeah,
front of 1,000 people, you're supposed to find 1 or 2 people and focus in on them, not the entire audience, and just speak to them only. This is a very similar thing when it comes to copywriting, listings, images, graphics. We do very high end images with our products. We do our A+ content, and we put a very good data set together right from the very
mhm,
beginning. When it goes live, we are first testing in the first 7 to 21 days. Do we get impressions, clicks, and even sales organically, because we put the best data forward? There's a score called an IDQ score. It starts at 100 and it hits the day your listing goes live. And then it goes down from there. Okay. The listings that are the oldest with the highest IDQ scores will usually be the top sellers, top 5 sellers in your node. Okay. They've been there the longest. They have the highest score that meets them the highest relevancy, which means you have to
mhm.
crack the data score of this algorithmic engine. You can't force it, manipulate it. I see all these people talking about off Amazon traffic to manipulate it. That's only temporary if this is not set correctly. So we are spending the first 7 to 21 days of our product launch determining how organically ranked are we in Amazon's engine by impression, clicks, and sales in the first 7 to 21 days without touching it.
All right. Now we're going to get to the second part of we're on Amazon.
Yep.
We've got our private label product.
Hmm.
What do sellers need to know about FBA if they're not familiar with
Yeah.
Amazon FBA?
Well, in simple terms, it's an automated system. They spent billions of dollars creating a system of what's called last mile to the customer,
Mm.
delivery of products, return of products, etc. It's warehousing and infrastructure. It's now AWD, Amazon Warehouse Distribution, AGL, etc. There's different systems that they've deployed for product movement, logistics, and warehousing and freight. You basically have requirements for how you package and bundle your products and put them into Amazon's warehouse. Amazon's warehouse acts as what's called a 3PL, third party logistics company. And as a product is sold on Amazon, they pick and pack and ship it to the customer. They do all that for you within the fulfilled by Amazon system, meaning that I don't have to warehouse them myself. I don't have to have piles and stacks of them in my garage, and I don't have to ship and flip them constantly myself going back and forth to the post office. Okay. That frees me up to be the direct response marketer, to be the best brand builder, to be the person who speaks to the avatar, runs the data, and operates more like a CEO.
Mhm.
That gives operational controls into Amazon, which is both positive and negative, especially if they're charging different fee levels and structures of fees, et cetera, which has been a challenge for a lot of sellers. It's been challenging
Yeah.
for the white label. It's been challenging for the arbitrage people. But the true business brand building private labelers, it is not a challenge. You will not hear us complaining about it. We're actually making more money now than ever before. Do you know why? Because all of
Tell
those other
us.
people who are messing with the system, who have products that are less than $20 on Amazon, are now falling victim to all of their policies. Those of
Yeah.
us in the private label world are being affected, but not as affected as the rest of those sellers because we have more profit margins. We are running in the private label game. We are seen differently than the wholesalers, flippers, white labelers, and product people on the arbitrage side. And so we're seeing brand building. We see brand development managers. We've got account managers. They treat us differently. It's very frustrating sometimes because they do stupid stuff with their AI system. Amazon can be really dumb at times, trust me,
Hmm.
but we play within that system like any other. So as we go through the marketing and growth of that, that's where you see this logistics system and freight system is what we use to start delivering. It's also because a third party logistics company, it's the hub and spoke to other channels. So we can take Shopify products and channels and have them delivered by Amazon. We can take TikTok shop products and stuff over there that are sold and deliver them by Amazon. So once we set that FBA infrastructure up, it becomes a 3PL to all of our other channels and creating a simplified automated system that doesn't require as much management.
Explain to anybody who is not familiar with the fees, the FBA fees. What kind of things can they expect
Yeah.
from FBA when they send product there?
So you're paying for this infrastructure, you're paying for the warehousing, you're paying for the marketing engine that is Amazon and a referral fee, okay, FBA fees and referral fees that stack on to each product anywhere between 35 to 37% on average. That will vary a little bit by the products you sell. At the top you sell. If you're below 20, they lowered some of those fees to incentivize sellers in the $10 to $20 range to be able to sell more with less fees. If you are above in certain categories, fees will be on average 15%. Sometimes they're as high as 25, sometimes they're lower, on average at around 15%. You're paying for their infrastructure and traffic, et cetera. You're getting access to it, but understand it's going to cost you 35 to 40% of your product sale that will go into that economic engine. Now, that sounds to a lot of people, Debbie, like a heavy front loading.
Yeah.
But when you go over to paid media, when you go to buy traffic and acquire customers, you will pay 30 to 40 to 50% or more to acquire customers in today's world with current CPMs, metrics, Facebook, YouTube, et cetera, to acquire those
Yeah.
customers. So you're spending it on one side or another at the end of the day. So people scream about Amazon fees and systems, but I'm getting access to 150 million buyers whose sole intent when they're there is to buy something in 30 seconds or less. So for
Yeah.
me, having that background in paid media and traffic and having to go find those customers and woo them over, have that audience conversation and maturation funnel in place and all the technical components to get them to a sale. For me to start out at the very beginning, it's technically less difficult to put somebody in a position or launch a new brand within Amazon than to
Yeah.
teach them how to go buy media, traffic, etc., where they may spend $50,000 to $100,000 dialing in that side of the platform before they ever see profitable results. Okay.
Yeah, one of the things that I always tell them too is that the other thing I like about Amazon, yes, you're paying for the shelf space, you're
Yes.
paying for the shipping, but the other thing I like is that you're getting the customer service. They're processing your returns, they're handling all of that for you. Where if you're new to Amazon and you start getting some items returned, it can start to get really I mean, just almost like
Logistically
overwhelming.
challenging for sure. And
Yeah.
it's part of why we don't sell products less than $50. So when
Yeah.
you do the cost ratio, when you find out where the net profit is, when you go into my green light process and determine what is green lit on 4 metrics that over 12 years, we've got it down to 4 metrics that we follow. Okay. And those 4 metrics have to go green. If they go green, it is because we've accommodated all of those fees: shipping, logistics, freights, returns, the FBA referral fees, the A cost fee for marketing, the return fees and storage fees. We've accomplished all of that and still got 4 green lights, which means we can sell each of those products profitably and handle all of those fees. How do I know that's really good? Because we just went through one of the weirdest times we've had in the culture, I think, of our entire world. Within 4 years, so much logistical things changed
Yeah.
during this period of time, and cost structures went very different, and they went parabolic in some ways and they went hyper growth in others. So what we saw was containers that were like 4,850 ish or so dollars pre 2019 into 2020 went to 25 grand in shipping containers, right? And within 2020, 21. And because we were selling certain products, profitability, and we're very smart in our operations and lean in the way we do things, we went through that just fine when many businesses fell out. The
Mm.
backlash of that in 2024 to 2025 is you're now seeing that kind of go down this turn, okay, where people fell out, businesses fell out. Inflation has kind of created problems to some degree, even though Amazon's just set sales records here this last quarter
Yeah.
for sales. Is that we're now going to see a churn. We're going to see a churn in 2025. It's my belief as I look forward and with all this experience, we're going to see a churn and a growth backwards again. I think is going
Mm.
to be tremendous in 2025 as fees and structures change, as certain things with administration promises may change some of those things with tariffs or other things that we're looking into
Yeah.
for manufacturing. And so we're just wading those waters as we get through it. But I'm very optimistic that so much is changing positively, having watched that dip down, and now I'm going to see it come back up like it normally does. I'm very bullish on 2025.
So, how do you recommend that sellers handle their inventory management and scale then once we've got it successful, we're getting things, how you keeping track of what you
Dashboard and
need?
blinky lights. So we use Seller Dashboard to manage logistics. We can get down to profitability per SKU, which then ties us, of course, to brand and brand to business. And then it actually tracks inventory and logistics and warns us of product changes, product outages, or coming stock outages, and gives us predictability in time with our current supply chain and manufacturer to know when to make an order, when to get it on the water, when to get it in stock, and to ensure we don't stock out. So we run a
Yeah.
very lean supply chain and logistics chain, which allows one operator to run like 4 companies because it's literally watching blinking lights, dashboards, and communications between manufacturers to ensure just-in-time shipping on the water is done to keep products in fulfillment, to move them into AWD or over to FBA as needed, or even put them in 3PL companies. So there's 2 of them we work with on each coast where we stack inventory there, and then it gets moved into the upstream as needed so we don't run out of inventory. So we run a constant lean process, and we use tools and systems like Seller Dashboard to do it.
So let's talk about the external traffic that you mentioned just briefly a little while ago and
Sure.
stuff like that. Is there any point when you're on Amazon that you are going to use any proven strategies to drive external traffic to Amazon?
Absolutely. So in that first 7
Okay.
to 21 days where we're testing organic, what we're determining is what we can anticipate as a cost, our average cost of sale being after we've determined we're making organic results. What a lot of people won't do is they'll launch that product in there and immediately put ads on top of it and then be like, well, I don't know what metrics are driving which particular outcome. I want to see organic metrics first, so then I know what to tie into PPC metrics, A cost and otherwise, because the number I'm actually going after is tacos, total advertising cost of
Yeah.
sale.
Yeah.
So I want to see organic come first so that I know I'm dialing in the conversion rates, okay, organically meeting the needs of the customer and getting them to see the product in 30 seconds or less, determine it's the one they want. Then I will
Mhm.
add marketing in Amazon. That's gas to fire by targeting keywords and are using a strategy that we've developed over many, many years to test and validate auto responding campaigns, as well as target campaigns and buy campaigns and defense campaigns. And all of that structure goes in place once we know organic is coming. And then we're shooting for tacos. So we'll do things that others won't. We'll buy traffic at 120% A cost for as long as it takes for us to overtake market share, because I know my organic is already dialed in. So a lot of people are doing this in reverse. They're trying to fix organic with PPC, not realizing they didn't get organic right from the very beginning. So now they're
Uh,
playing the PPC, which they're playing right into Amazon's hands, which means they're giving plenty of money to Amazon when they shouldn't be doing that. Okay. And what they actually have is a listing an organic problem, and they're trying to fix it with PPC. So they're overspending over here. So once you get that
okay.
taco, it should be between 8 to 15% for almost every listing across Amazon based on category. It's really irrelevant. It's 8 to 15%. If you can't get your
Yeah.
tacos within that range, you will not break into those top five. Okay. You will not
Yeah.
overtake
Now,
their market share in time. Your data is simply not good enough to overtake their market share. Okay. So the second component of that gets down to inventory and off Amazon traffic. Okay. So once I'm dialed in, once I know my tacos is dialing in and I'm seeing myself organically growing in the system and I'm seeing the, PPC is helping me to raise that up, and I should see that pendulum swinging into more organic and less PPC. If I'm seeing that turn, that's a signal that I need more inventory. Okay.
okay.
Because the last component in Amazon, based on its algorithm, its A9 systems and their logistics systems, is I have to have more inventory than the next competitor, or it simply will not let me sell more
Yeah.
inventory because it is throttling me at that point so I don't run out of inventory. Because if somebody wants it, the engine is saying, well, let's give it to them. And they don't want us to go out of stock because then the
Mhm.
customer won't have that product. You understand?
Yeah.
So the system is geared to keep the product in stock. So it will throttle me if I have less inventory than the next seller. So if they've got 1,000 units, I got to get to 1,200. If they got 5,000, I need 5,500. If they got 10,000, I need 20,000. So
Hmm.
once I do that, the algorithm will then switch me, okay, into more traffic and higher tiers as long as my entire data set is better than theirs. The last component of that is inventory. To affect that, once I know it's dialed in, off
Yeah.
Amazon traffic, we'll do that. If I see traffic from TikTok Shop, referral traffic from anywhere else, including Shopify or organic, it will simply add more gas to that fire and saying it's relevant. Amazon sees it. There's other customers and other channels that are talking about it and want to see it. It particularly loves TikTok traffic right now. And if it
Yeah.
just sees
Yes, it
signals
does.
of that traffic through what are called brand referral links, okay, you want the traffic from off Amazon to always come from a brand referral link. Okay.
Okay.
That means clicks do not affect your SEO side of Amazon. It does not affect negatively your organic ranking. If you send people directly to your Amazon listing, you will absolutely affect your organic ranking. If you send
Yes.
them through brand referral links, you will not only get the benefit of sending 1 million clicks in to show Amazon that you're in check, it will not negatively impact. And for every sale that's made, they'll give you 10% cash back. So if you got a 15% fee, you get a 10% cash back. That off Amazon traffic now only costs you 5% for each unit sold. So
Yeah.
once you dial in the first two steps of that, the third step of off Amazon traffic will add gas to fire and simply rank you faster against your competitors. But again, the last component, very important, Debbie. If I don't have enough inventory to overtake my sellers, it doesn't matter how many clicks I send off Amazon, they will throttle me from stocking out.
Yeah. Yeah.
If I don't
Uh,
have the inventory checked into Amazon, that's why I said this is a cash flow inventory opportunity to grow and scale this. Because if I'm going to put that extra units in and put 10,000 units in now, because I'm confident, and put 20,000 units in and get ahead, maybe start shipping a container every month, I am going to eventually win the game because I am now within hyper relevancy to the algorithm
mm,
based on the
yes.
customers coming in the system, and it will reward me with fast growth. In fact, month by month, we will see these accounts double. Okay, 50
Oh,
to
wow.
100,000 a month to 200,000 a month to 400,000 a month. Because once you increase that, that's your opportunity. So at the end of the day, once you dial it in, it's you that is the biggest risk and limiter to the growth of your business, because now you have to take a new risk level. And that's where a lot of people find this very challenging. They either can't get access to the capital, or they simply won't risk the next level the business is telling them to go to. And they will
Yeah.
cause it to stagnation, or capitulate against the market, and they will lose their opportunity. And the longer you
Yes.
sit there, the longer the market
The
will
law.
keep that data record for you, and it will simply keep you there.
Yes. Yes. How can sellers protect now that they've created their private label brand from anybody who's copycat or
Yeah.
unauthorized to sell on Amazon?
So, in simple ways, at the beginning of Amazon, we do not launch a product until brand registration is in place. So, once the account is set
Okay.
up, we will get the trademark of the brand we're going after. We will get brand registration before we ever touch it. If it's a
Good.
product we believe has design or notice of allowance opportunities, we may even file a notice of allowance on the design patent side in order to make it defensible. We will look at other measures, certifications, registrations, or other places that we can get that will add intellectual property. So, for example, we actually solicited the Egyptian government for one of our products to get a registration number to say that it was Egyptian certified this from the government
Yeah.
of Egypt. And we have that registration and we put it on our marketing. It adds an intellectual property differentiator to the market, which stops other sellers from attacking us. Brand registration, trademarks, notice of allowance, and registrations are 4 ways that you can defend your brand against the market from counterfeiters or etc. Or if you run into trouble, you have what we call a bomb file that is put together for each of these brands, and we literally have all the documentation, data, etc., setting in each file for each brand. If something happens with the account and Amazon specifically, that SKU or that product, we will dump all of that data on them in a case file and then beat the crap out of that case file until they get a human to look at it, and that will usually
Yeah.
shorten the time in which Amazon's automated system did something stupid. So now we have to get in front of a seller performance account person, and once they see that file and they go through it, they will usually reinstate the problem or fix it very quickly once they see we have it. So we drop that bomb file on them with all the documentation right out of the gate. And then we threaten
Okay.
them with lawyers.
So, yeah. Last thing, you touched on it just briefly.
Yep.
Do you foresee trends that might impact some of the private label sellers on Amazon? And how do they prepare for these future changes?
Yes, it's an ever evolving market. Has become, we now say, if you're going to sell on Amazon, you need to be a professional seller. This is no longer the game of side hustle or hobby businesses. You must
Yeah.
play the game like a real business person, or don't play it at all. Okay. That means you need to do the things required to get that business to grow properly. If you're a private label seller and you do not have your business in line with anything I've discussed today, that is your opportunity, because you will fall victim in the coming year due to the amount of change that is occurring and the amount of sellers that are falling out of the market who are not private label, is leaving the wide open areas for private labelers like us with capital and experience to come in and take them over, because there are new areas opening up
Yeah.
where they have been entrenched a little bit over the years. And because of Amazon's new restrictions, changes, warehousing fee restrictions, as well as limiting the amount of types of products that are selling based on those that were being predominantly arbitrage, wholesale, flipped, etc. In fact, the only other thing you should do is wholesaling, where you can prove the invoice, prove the brand. If you can't do that, then you shouldn't do anything but private label on Amazon. And
Yeah.
we're building a real brand. Private label is the best saleable asset you're going to get. Wholesale companies are difficult to sell. So if I'm going to build that saleable asset, build it the right way. And the end result is those changes are occurring right now that are going to very positively impact the system in the next couple quarters. I see it happening very quickly. Brands that are relevant and entrenched are actually seeing growth in the system faster and faster as the
Good.
demand for those products is becoming greater, and the other brands are falling out of the system, literally.
Yeah.
So,
Well, I
I,
want to thank you, Neil, actually today for a lot of information,
well,
especially for anybody who is thinking, oh, yeah, I think I'll just jump on this Amazon thing, that I think is so important, because there's so many people out there who just, pay, I'll give this, $3,000 program to you for $500,
life
selling
dreams
the
don't come on
courses.
$500.
Yeah, selling the courses, selling all of that type of stuff.
Correct.
And I love it when I actually get somebody who's been on there for as long as you've been on there, and you can actually tell us some real truth to what it takes to get on Amazon and some of the things that you have to do. It's not a program, it's not this. I love what you talked about today. Thank you so much.
My
I want to
pleasure.
thank everybody actually for joining us today. Now, I have a really special treat. As I mentioned when I introduced Neil, he actually has written a book that is called Almost Automated Income with FBA, and it shares all of his insights and stuff like that. He is actually going to give us several copies, and we're going to put a redemption code on the podcast underneath here today. And the first people who redeem that code will receive one of his free books. And if you love what he said today, because I thought it was extremely educational, sometimes it's not as educational as Neil made it for me. So he made it very easy today. I just want to say thank you for joining us today on Ecom Insiders, sponsored by SPCTEK, with our guest speaker, Neil Twa. If you don't get one of the free books, go on Amazon and buy the book. Okay. But if you have questions, Neil, is there a website that they can go to ask questions and stuff?
Absolutely. You can go to voltagedm.com. That's voltagedigitalmarketing.com. Check out the free presentation. We have our as seen on TV case studies. My partner there, Kevin Harrington, and I go through how we created this strategy. You guys can watch a presentation. We got free trainings. Of course, the book is there. Virtual workshops to come in and learn those 4 and 5 steps where I go through it step by step in tactical format and give you the templates and information and stuff. In fact, those who grab a copy of the book will get invited for free to that. It's normally a paid workshop. So you guys who grab that will get an opportunity to join me for free on the next workshop coming up. And I encourage you guys to remember that your opportunity begins at the end of your excuses. So stop making excuses, get out there and do something imperfectly, and something perfect will happen along the way.
I love that. Thank you so much for the special gift for the books today and stuff like that. If you enjoyed today's session, I want you guys just to smash that like button and please subscribe to get future editions of Ecom Insiders. Again, thank you so much for your time.